Welcome back to Everything Money. We are doing a blind stock reaction. We have the numbers up here. Paul is here. Jimmy from Learn to Invest is here. Folks, I want you to see as a viewer what three value investors, Paul, Jimmy, and Mo, think about a company. They have no idea what it is. They have no idea what sector it is, but you're going to see them guess and make a play on what a good investor can look at when buying a business, which you should be trying to do moving forward. Jimmy, I welcome you in. How are you doing, my friend?
Good. Hi, I'm Jimmy.
Of course you are.
Thank you
Paul,
for having
go
me.
ahead.
Mo knows the stock, I believe.
He does, and he's going to help us. He's going to help us through.
Okay, so guys, let's go through the 8 pillars. Pillar number 1, we want a 5-year PE below 25.
231.
231, but Jimmy, look at this. The 1-year PE is 20. Okay, so this tells me a couple things have happened. Either last year they had astronomically high earnings, or in previous year they had massive write-downs or some sort of losses along the way. Okay?
Yeah.
Okay, so pillar number 2. We want revenue growth over the last 5 years. Can you show me the income statement, Uncle Seth?
Yes, we'll get into that right now. Here you go.
So, oh wow, look at this jumps. 413 million.
I think they're growing well.
My God, this looks exactly like Tesla.
That would be where I would guess.
Just from the revenue?
I mean, look, the stock price, the revenue, the chart.
Timing-wise, that's about where they would have been.
Oh, man. But the market cap was only 113 billion.
Yes.
Did you see that?
That's why
Go back to the other page, Seth.
That's why I like this. The cap versus the revenue.
So market cap, $113 billion. But this chart literally looks to the T like Tesla.
Now, there are other auto companies out there.
Yeah.
But, I mean, there are EV plays. This one's a more well-established. I mean, if it looks like Tesla, I'm not saying
And
it's an
also
auto
they're
company.
paying a dividend.
Yeah, dividend.
Tesla's not paying a dividend. So their dividend yield is 1.4%, which they can easily afford. Boy, look at this free cash flow last year, $3.5 billion. Their 5-year average is $550 million. Very low return on invested capital in the last 5 years.
Are you guessing a sector?
Oh, man. Well, look at this margin. 20. I mean, this screams Tesla. What the F is going on? Did you change the market cap? Are you effing with me? You changed the market cap.
Tim, your thoughts?
You changed the market cap.
Yeah, it has to be either a Tesla or a tech company. 25% is high.
What?
It's Tesla. Oh, no, the dividend. Damn it. You guys changed things. You guys have edited this thing. It's Tesla. You guys edited it. You screwed with me, didn't you? Am I right?
Jimmy, the point I was trying to do.
It is Tesla. F you all. I knew it. I got it right.
What I was trying to do is, so I wanted to.
It's Tesla.
I wanted to propose a company that looks really great with nice growth.
Yeah.
I just took $1 trillion off of the market cap, right?
Okay.
Right,
And
Paul?
the dividend.
And I added a very small, tricky dividend. I moved.
Now remember, with the dividend, they did say that they're going to do whatever that split
Sure,
is.
dividend.
with some
Stock
kind of stupid
dividend.
Yeah.
So here's what I really did, folks. I took the market cap and just took a 0 out of it. I took the PE and the price to free cash flow, Paul, and just took a 0 out of it. So if you go to the 8 pillars, this is flossing with, well, no, it's not. But so again, I had to change this. I took a whole digit out. So not 1,000, but, you know what I'm saying? Not 1,200, but 200.
Oh, here's the edit right
Yeah, I
here.
see the.
There's the edit right there. So guys, I think from this perspective, like let's look at the company, because I want to look at the growth potential was awesome. The net income growth is great. The revenue growth is great. Boy, this share is outstanding. Look at this. They've diluted the hell out of people.
It's incredible.
What I was
Increase
trying.
their share outstanding over.
So for our viewers at home, I was trying to show Paul Tesla with
that
all
real?
the numbers at just 1/10 of the cost. And Paul, even so, when you get to the stock analyzer tool, it's a screaming buy at 1/10 of the cost. I just shifted the market cap.
Yeah. So 1/10 the cost is a screaming buy.
I changed the PE, and it's a screaming buy at 1/10. So 1/10 of the price.
So when we were at dinner last night, when we were talking about this, I was like, okay, put it together so Tesla becomes a screaming buy and show that this is maybe Tesla in 5 years.
And what I say,
7
I've been
years.
saying, what I say in the last video, I think Tesla's worth $50 to $100 a share on the high side.
Yeah.
What's 1/10 the price right now? $100 a share.
Exactly.
Guys, this isn't.
And that was the point of the
Every
exercise.
investment is the present value of all future cash flow. You can project cash flow all you want, but the problem is most of the Tesla hype boys are looking at it as a ticker symbol going up and up and up and up.
Yes.
They don't get that they're buying a piece of a business. You're buying a piece of cash flow. If I came to you, Jimmy, how old are you?
40.
If I said to Jimmy, I know for a fact you're going to die at 100, and I'm going to give you $10 a year for the rest of your life. That's $10 a year for 60 years, $600. What would you pay me today for that? I don't know what the number. There's no right or wrong number. It all depends on what his expectation of return is, how trustworthy he thinks of me, being able to pay him, etc. All these things. What was that?
When are you?
When am I going to die? No, but that's the thing. That's the point of investing. When am I going to die? When's the company going to die?
Yeah.
When are they going to have problems? You're telling me Tesla's going to be the number one car company for who was the number one car company 60 years ago? I don't know. But all I do know is I guarantee that number one car company back then, even if it's around today, is probably very different than it was back then.
Very much so.
Right? So these are the things to think about. And when we look at Tesla, I'm looking at this going, damn, this is Tesla. I'm like, okay, I'm getting tricked here. I'm getting tricked here. And Tesla's a good deal at 1/10 the price. Congratulations, Tesla.
That's it. I can even stretch it. Maybe at some point, like we said in a previous video, maybe 300 a share. Maybe at the point that the stock price comes down to 300, maybe it meets its value at 300.
Do you know what made me realize that I was being tricked? The
Go on.
margin.
The margin?
I knew the gross margin and the profit margin. I'm like, nope, this is Tesla. I'm like, everything else, I'm like, this is Tesla. It's 25% margin, 10% bottom.
Jimmy, or when I told you last night, it's fun to go and look at the margin and kind of narrow it down that way.
Yeah.
That's exactly
I'm like,
it.
this is Tesla. I'm being tricked here.
Darn. Tim, we couldn't do it. We tried.
We got another one? All right. So thank you very much, folks.
For trying to trick Paul.
Namaste. Is that what you say?
Sure.
Yeah,
You're into yoga, Paul, for sure. So. All right. That is our blind stock. We tried to get you, Paul, but it wouldn't work. Fondle thumbs up. See you next video. Thanks, Jimmy. Thanks for playing along on this one. Appreciate it.